ended the first segment with some positivity, albeit also with some worries about valuations. But what about the tailwind that comes from a very friendly Federal Reserve? Should we expect that to continue? Is that the true friend of every investor at the moment? Clemens, what's your take?
Well, clearly, if there's one thing that the Fed has succeeded in the last decade, since the last great recession, is the inflation of asset prices. The stated target is, we want to bring inflation up to a 2% level. But what really happened is asset price inflation all throughout the sector, whether you take equities, bonds, any other asset type class, real estate. I was just looking at real estate prices in our area in LA. It's just insane. It's mind-boggling what people are paying for a little bit of land and a shack basically. The question is, what do we all do? Because we all know this is risky, but the Fed is driving us towards risky assets. I have advocated for a long time that there has to be some form of investment that gives you a decent rate of return with very little risk. Yes, we have bonds, but there's no return. And you mentioned that earlier, bond prices are at an all-time high. So, bond prices can actually go down. That can happen. I don't see it happening anytime soon with the way the Fed was telling us that they don't see anything happening in terms of interest rates until 2023. So we have at least another 2 years of basically close to zero interest rates. And that means we're all forced towards riskier assets. Unless you can think of an investment that has a decent cash flow, a decent return without any risk or with very little risk. Perhaps some REITs come to mind. And in fact, there's some REITs that are very attractive in terms of their yields. I was just looking at talking about energy earlier. XLE, the energy ETF, has a dividend yield of over 10%. If we go along the path of maybe not quite fast, but at some point later next year or the year after, we'll see a rebound in travel, a rebound in just going back to normal. Then energy will be a big component of that success story. So if I can get a 10% yield on an investment that, there's some downside risk, of course, with oil companies, but the upside, at least, you have some good yield there.
On the REIT side, I agree with you that when you take away some of them, perhaps disappearing segments like the brick and mortar stores, perhaps that are not going to be as prevalent as in the past, I do believe there are some pretty interesting ideas. What do you think, Chris? How do we supplement the need for good assets with good cash flow, predictable cash flow at a time where everything seems to be very expensive?
Right. Well, it's Clemens mentioned, and I completely agree. I mean, the support from the Fed, which is probably needed, is inflating prices of every asset class, and that is a little concerning. In particular, I'm concerned about inflation, as also Clemens referred to. For example, talking about real estate. I'm conflicted there. On one hand, I see that the real estate market can be in danger, quite frankly, a little bit due to the fact that now a lot of renters will have to, finally pay for what was not paid prior for the lease. And so you might wonder what is going to happen entering in 2021. But at the same time, right, we see prices in many areas. For example, here we're in California. If you look at Northern California, Sacramento, for example, you see double-digit growth in real estate. So it is puzzling in a sense, right? You're saying, well, there might be looming issues in the real estate market, but at the same time, you see a double-digit growth, which is truly incredible. So it is interesting to say, okay, what am I going to do? Am I going to avoid real estate? Am I going to avoid REITs, for example, or I'm going to jump into it because probably they're going to provide some interesting returns going forward. So it is not an easy decision, I have to say, to find assets, going back to your question, that actually provide an adequate yield in relation to the risk is not an easy task, I would say. So going into 2021. So So again, specifically, I'm concerned about inflation. We might get the impression that the stock market again is going up, that certain asset classes is going up, but in reality, they're just making up for the lower purchasing power of the U.S. dollar. So that could be an issue moving forward, in my mind.
So we're talking about real estate, and we were talking about the difference between commercial and residential, and we were mentioning the problem with supply in the residential market, especially in California, and especially after the 2008 situation. Any comments on that? Should we use that as an excuse to justify the valuation, or that is really just truly one variable that can change anytime?
Well, from my perspective, you have to really differentiate what we've seen in some of the hottest areas like downtown LA, West LA, Santa Monica, the Bay Area, is through COVID, some of these employers said, you know what, stay home, go somewhere else, work somewhere else. You don't have to come to the office, it's too dangerous. So we've seen kind of an exodus of especially high-class tech workers from these high-priced locations to as far as the Midwest. I know that Nevada have a friend who works in real estate in Nevada, and their prices are up double digits, like Chris was saying, but it's all residential. So they're buying up stuff with the price thought of California, and they go to Nevada and think, wow, this is dirt cheap, and not realizing how they've lifted prices overall in the residential areas. And I think there's kind of a bit of a softer price point now in the Bay Area, in San Francisco proper, in downtown LA. But in the residential areas, even here in California, prices have gone up. I think, real estate is complex. It's very locational based. And we have to, like you said, we have to make a distinction between commercial and residential. And then within commercial, retail has been suffering. But there's potentially an upside if some smart architects go in there and say, okay, we have all these malls, millions and millions of square foot of mall space. Why don't we convert that to residential or some form of kind of mixed living retail space? I think that there's room for that to kind of revive these mall spaces again. It just takes a bit of imagination, creativity, I think. Funding is certainly there, I'm sure.
Right. I agree. Actually, that could be a great opportunity for a complete redesign of some of our commercial spaces. But then if real estate, it's maybe opportunistic, but maybe risky, what are some of the other maybe choices we have? What about Bitcoin?
Faith, to talk about Bitcoin, I'm still a non-believer, as far as I'm concerned. And so I know that a lot of people are jumping in Bitcoin and other cryptocurrencies and see it as the currency of the future. I still don't see it for a couple of reasons. One is the magnitude, if I have to say, how much is available, basically. But most importantly, it's not so much about that. I don't believe in cryptocurrencies because no government on Earth, on this planet, will ever give up the right to monetary policy. So the moment that cryptos will become a real challenge to the national currencies, the government will very simply say, you know what, no longer. You're not allowed to transact. You're not allowed to use it to purchase goods and services. And so that would be the end of cryptos, because that, again, would entail that if cryptos really take over, governments can no longer implement monetary policy. And I don't see how that could happen. Besides, the governments not being able, I would say central banks not being able to implement monetary policies would be disastrous for countries such as the United States.
Clemens?
Let me take the other side of the coin just for argument, if I may. So with monetary policy being where it is, you cannot blame a Bitcoin investor to invest in Bitcoin, thinking that the value of the dollar has just gone completely down. The Fed is holding now over $7 trillion worth of assets. Everywhere in the world, everywhere in the world, central banks have printed money. Switzerland negative 0.5 or more on the 10-year government bond. Germany negative yields on the 10-year government bond, and you can go through many of the European countries with close to zero or negative yields. That forces people to invest in something where they at least have the belief it's not going to just, go down to, to the inflation drag, if you will. And another thing, an interesting argument that I've heard from a friend of mine is if you live in a country like Iran, Venezuela, Guatemala, or any of the kind of war-torn countries or where they have political issues and hyperinflation perhaps, or high inflation, Bitcoin is possibly the safest asset to own. And if you're, for example, if you're a refugee and you have assets, you could convert these assets into Bitcoin. And there's a way to actually have Bitcoin just use a passphrase, and you can store that passphrase in your mind. You can travel across a border with literally just your shirt on and seemingly have no assets, but then you're in another country and you can convert this Bitcoin into some dollar or euros or some other hard currency and actually show and actually preserve that wealth that way. And that is perhaps, there's a couple of arguments why I think Bitcoin has some form of a future. Currently, as far as I know, there's over 8,000 cryptocurrencies right now. Bitcoin obviously being the number one, but there's all these other tokens and Ethereum-based other cryptocurrencies that are out there that are cool and sexy for young investors to trade, and a little bit like what we've seen with the Robin Hood type investors, right? So there's a new generation of investors that trade basically on their phone. So they have this app and they trade on the phone, and they basically throw darts at assets, having no understanding whatsoever about finance. And they see, throw my darts here, throw my darts there, and everything's going up, and they think they're all geniuses. We're old enough to have seen this before. We've seen this in the 90s, right? Where everybody was a genius investing in whatever, .com. And they all were rich for a little bit, and then things came crashing to a halt. So I don't know if Bitcoin will crash this year or next year or the year after, I don't know. But I have concerns. And the last concern is there's no cash flows coming in from Bitcoin. So Bitcoin is just like gold or silver or some other fictitious asset.
Well, but that's a very good point you make, but maybe we can say that it's going to be the new gold, the gold for the new digital generations. Have a little bit of a niche play in portfolios for the younger investors.
Certainly, yeah, and that there's no reason why we can't allow, from that perspective, to have an investment in Bitcoin, just like we allow the investment in gold or silver or some precious metals.
Well, we're almost running to the end of this, so I want to close with the most difficult part. I want to hear your favorite assets for 2021. So you're going to have to stick your neck out. And Clemens, what is, in your view, your best idea for 2021?
I'm leaning a little bit towards China. To be honest, I have a few bets in the market, so not a single stock that I can think of, but we've seen some good movements in some of their EV, some of their technology. FinTech is perhaps a good idea because I think China is probably a couple of years ahead of us in terms of FinTech. That's what I can think of. Yeah.
Well, that's good enough. Yeah, we don't need specific names actually for regulatory purposes. We want to stay away from pushing individual names. But Chris, what's your best idea?
Well, my best idea, maybe not so original, but I like SPY. When there is uncertainty in the market, in the economy, I like to go with an ETF that represents a little bit the market. We know that it's not as diversified as it used to be, obviously, but I like to play with the SPY above all during times of uncertainty. And another type of asset that I think is still a lot of potential is oil and gas. I know I'm like a dinosaur saying this, but I do believe that every single drop of oil will be used on this planet before the end of time. So that's my stance, and so I
And on
think
the
the oil and gas.
SPI, are you going with the market cap version or the equally weighted version?
I would go with the market cap. Yeah, the traditional.
All right. Well, guys, thank you so much. This was a great conversation. It was great.